Hello and welcome. Well, in a few days from now, we are going to have a new listing, and I'm talking about Affle India. But before that, let's take in a look at what the company does and what are these funds through this IPO which are going to be used for. And for that, I'm in conversation with the chairman, the managing director of the company, Anuj Khanna Soham. Anuj, thank you so much for joining us and perhaps taking us through what entails when it comes to the future of Affle. Let me start off by, perhaps asking you about if you could actually elucidate your business for those investors who may be very well interested in your business right now. From what we understand is that you do provide solutions for advertisers, but if you could give us a better idea about a little bit of perspective here as well.
Well, good morning and thank you for having me with you. Affle India has a very clear focus on technology and data-based platforms which essentially do three things for the advertiser. We help them to acquire new users on the smartphone. We help them to engage and get repeat conversions with their existing users on the smartphones. And we also work on the third use case where we help advertisers to engage people on the smartphone but try to drive footfalls into retail stores and get transactions. So fundamentally, we are a company that is deriving business outcomes through our data and technology for advertisers, helping them in their single focus and cause to impact their revenues, help them in sales by getting greater engagements with consumers on smartphones. That's what Affle does, and that's what we've always done for the 13 to 14 years since I've been leading the company since inception.
Okay, Anuj, so then let's move on and talk about the IPO specifically. And my question then was that from what I understand is that there will be a fresh issue of around 90 odd crores, and investors are looking to offload a certain stake, and that could be to the tune of around 370 odd crores. Could you tell us which shareholders are participating and whether or not they're partially or completely exiting?
Your information on the issue size is correct. If you look at the regulatory requirements in India, there is a certain amount of issue size that is mandated in order for us to complete the IPO. Now, as advised by the bankers and the issue managers, the reason why we are doing only 90 crores of the primary issue is because our company is not just a fast growth company. Affle India is a very profitable and EBITDA positive company and has a track record of doing that for over 5 years now. So in terms of the primary issue, the company doesn't need too much cash from the market or from the investors. So we are looking at raising 90 crores as the max amount of cash that we could justify as a primary issue. And to make up for the total issue size that is required for regulation, as well as advised by our bankers, which is Nomura and ICICI Securities, we brought in the offer for sale from our Affle holding company, which actually owns 92.2% of Affle India today. Now, in the holding company, we have great investors who have backed my entire journey as Affle, for like Microsoft. We have D2C from Japan, which is actually an NTT Docomo subsidiary in a joint venture with Dentsu, Itochu, Bennett Coleman Group from India, as well as Madison, which is one of the larger Indian ad agencies. Now, all these corporate shareholders are shareholders in the Affle Holdings company in Singapore. Now, none of those shareholders is exiting or even diluting their ownership. Neither am I, nor are my employees. So once the offer for sale from India's IPO goes to the Singapore company, the board of directors will decide how to distribute it, either as dividends or share buybacks or any other corporate purposes. But essentially, no individual or corporate shareholders' ownership in Affle Holdings is changing with respect to this IPO. So we are all invested for the long term. And like I said, we are a very profitable company, and therefore the primary issue is limited to 90 crores.
Right, Anuj, from what I understand is that you guys have virtually no debt. So why choose a route of raising equity when we could have remained unlisted and raised debt to provide for funds?
Absolutely. So look, I have been an entrepreneur since I was still a computer engineering student in Singapore many years ago, and my first company was actually acquired by a public company. So at a very impressionable age, I've always aspired that I'm going to build value not just as a private company, but build value for a larger group of shareholders as a public company. So this is aspiration. This is something that my entire management team, if you go back and look at, interviews that we have done with, large credible media like yourselves, even in as early as 2007, I've actually gone on record to say, I will not sell this company, I will take it public, and we will acquire other companies. So, at that time I was, not even 30 years old, and as today I'm 41 with a management team where, if you look at the top tier, they have been with the company for over 13 years. In the top management team, there are at least 4 of us who've been together for 13 years now in building Affle. And there is significant ownership that the employees still have in the holding company. Going public is not just an aspiration, it's a statement of credibility. It's an industry event in the tech ecosystem where we are trying to stake a claim that, look, not just fast growth, but also profitability together can qualify you to go and be in the public markets as a long-term player. And I treat Affle as our well-nurtured teenager with strong foundations of corporate governance over the last 13 years with global investors and auditors around the world. So I think we are ready to go public. India is the best place for us to go public because India is our dominating market leadership position, and it's a great launch pad for us to dominate in emerging markets around the world.
All right, Anuj, so why don't you tell me about what makes your patents unique when it comes to advertisers, and how do you guys differentiate yourselves from, your competition as to whatever you consider competition?
So, look, I'm a computer engineer myself. As a scholar, I went from India when I was 16 on a scholarship to study in Singapore. And as a computer engineer, the heart and the DNA of the company is technology. More than 50% of my employees are software engineers, led by myself and my management team. So we will consistently, innovate on technology and file patents. Your question was about how our patents are different. If you look at one of our earliest patents that is owned by Affle India, has the title, within the title words, Consumer Acceptable Advertising. And I'm talking about this being filed in 2005 and 2006 when we started the company. Now, we had clear insight that the consumers are the key to success in this business. If the consumer is interested in transacting or converting for a particular advertiser, that's when advertising makes sense, not when you and I are trying to skip the ad or we find it as an irritant which is irrelevant. So our company focuses on consumer acceptable advertising, which talks about consumers' consent, it talks about consumer privacy, it talks about, finally, as an ROI measure, did the consumer engage with the ad and convert? And that's our business model, and that is also our strong differentiation. So right from inception, pioneering vision, which has stayed relevant till today, the patents as well as the technology platform differentiates us from competition on 3 fronts. One, we focus on emerging markets with an anchoring leadership position in India. I don't know of any of our other global competitors who focus on emerging markets. They all focused on North America, Europe, and when they talk about Asia, they talk about China, Japan, and Korea. They're not in emerging markets as strongly as we are. So that's one focus as a geography focus. Second is the business model itself. We charge our advertisers only when we deliver consumer conversions on a measurable, accountable way. We do not charge them, just for showing an ad or for a click that happens on an ad. We charge them when we derive a business outcome. That is a cost per conversion of a user. That is a big differentiation. And the third major differentiation is our focus on growth together with bottom line profitability and great return on equity as well as return on capital employed. Debt-free company, growing fast, growing profitably with a great track record of 13 years now, with a management team that has stuck along and is still very young and a long way to go. I think it makes us a very, very unique company. I don't see any competitor in direct head-on competition with us at the moment.
All right, then, Anuj, a final question. Your prospectus does suggest that you guys are going to use the funds for, working capital. Could you give us more detail as to where these funds are going to be employed?
Absolutely. So if you look, like I said earlier, our company is, EBITDA positive. FY 2019, our EBITDA is about 28%. It's a low-cost, scalable, platform-based business model, unlike IT services companies, which require enough manpower every time they grow the revenue, my company can grow and scale at the back of our data platforms and capabilities. So where do I need the cash for? So I'm saying that, look, the profits that I'm generating organically is going to fund the inorganic growth that we are doing. And that has been demonstrated in the last 2 years as well. If you look at our acquisition history, we have not taken debt to acquire companies. We have not used equity to acquire companies. We've used our own, accrued cash flows internally. So going forward, when I grow the company at 35 odd percent CAGR on revenue based on what we've done historically, I think that the profitability of the company will generate more cash. We'll use it for acquisitions. Now, all the organically generated cash will be used for acquisitions. So therefore, for the primary issue, we classified most of it to be used for working capital support purposes.
All right, Anuj, we'll leave it at that. Thank you so much for joining us and taking us through what we can expect from Affle, and wish you the best for the listing.
Thank you for having Affle India on your show today.